Hello ladies and gentlemen. I hope you are fine wherever you are. In this video, I'm going to take you through a complex depreciation question. One of the questions which you are likely to meet on exam day in your Acca financial accounting paper examination. Okay, this question is taken from a past exam question paper, and it is good for your revision in this topic, which is related to International Accounting Standard number 16. Okay, that is property, plant and equipment. Now, the question is here, ladies and gentlemen. The tax account at cost of a business for the year ended 31st December 20x1 was as follows. So we are given this T account for the tax account for a business. Okay, so we are given on the debit side everything we are told by the examiner is at cost in this T account. Okay, and this is the cost of the asset. Okay, the brought down cost. All right, and these were the additions of 160,000, and the disposal account was showing the cost of the assets which were disposed of, and this is the balance carried down. Okay, the balance sheet at the end of the year of 340,000. So from 240 we added 160,000 to become 400,000, and this is the same amount on the credit side. So our T account is balancing. Then brought forward accumulated depreciation at 1st January 2021 was $115,000. Okay, so this is the accumulated depreciation carried brought forward, all right, at the 1st of January 20x1. But I want you to see something here, that the cost, this particular cost is not as a result of taking into consideration this amount. Okay, this accumulated depreciation. No, the cost there is the original cost of the assets, because we are told that this T account is being presented reflecting the cost of the assets. Okay, so which means when you want to arrive, if you want to arrive at the carrying value of the assets, you need then to take into consideration the accumulated depreciation to date. The truck disposed of on 31st March had a carrying value of 20,000. Okay, so this was the cost of that truck which was disposed of, and this was the 20,000 was the carrying value. So for us to determine the accumulated depreciation, depreciation for the truck sold, accumulated depreciation is given by cost less carrying value. Okay, the cost less carrying value, and in this case the cost was as given there in the T account, $60,000 minus the carrying value of 20,000. Therefore, the accumulated depreciation is equal to $40,000. So the question is requiring us to determine the depreciation charge for the year. All right. But we're also told that it is the company's policy to charge depreciation at 20% per year on the reducing balance, and charges a full year's depreciation in the year of acquisition and not in the year of disposal. All right, so we then have to be very systematic. Okay, first of all, let us determine the cost of the asset at start of the year. That is on 1 January 20x1. This one is given as 240,000. The cost of the assets, all the assets, and then the cost of assets, asset disposed. This one was given in the question as a transfer to the disposal account. Okay, on the 31st of March, that was 60,000, as you can see in the T account there on the credit side, 60,000. So we are left with the cost of remaining assets at the start of the year. And this was 180,000. Then we then have to deduct accumulated depreciation, because I've already indicated that the cost of 240,000 was independent of the accumulated depreciation, because that was the original cost of the assets. We then have to put into consideration, or to deduct the accumulated depreciation to date. Okay, all right, but remember the accumulated depreciation figure which we were given, the 115,000, this amount was inclusive of the accumulated depreciation of the assets which have been disposed of. Okay, so since we have deducted these assets, we have deducted these assets here, this the 60,000, we have deducted it from the whole cost of the assets, of all the assets we have, which means we are now left, the 180,000 is only showing the cost of the assets remaining. Okay, so therefore even in the accumulated depreciation figure, we need to deduct the accumulated depreciation for the assets which have been disposed of. So in this case, we're going to say less accumulated depreciation, less accumulated depreciation. Okay, this should be 115,000 as given in the question, minus the accumulated depreciation for the assets which have been sold, and we determined it to be 40,000 from our computation here. Okay, so we're going to say less 40,000, and obviously we are going to have 105, sorry, we're going to have 75,000, and then if we deduct this amount from 180, we're going to have 105,000. Then this is the carrying value of remaining assets, carrying value of the remaining assets, okay, at the start of the year. Now, what is the depreciation charge for the year? Okay, now depreciation of remaining assets. Okay, let me just say on for it to sound better. Depreciation on remaining assets. Okay, the remaining assets are now worth 105,000, as you have seen there, multiplied by 20%, which is the reducing balance rate. So 20% of 105,000, this is 21,000. And then depreciation on added assets or new assets, added assets. The added assets were 160,000 multiplied by 20%, and these are worth 32,000. I mean, the depreciation is 32,000. If we add these two figures, we must get 53,000. Okay, and this is the total depreciation charge for the year. That's the depreciation charge for the year, and according to our question, it means that our answer there is C. Okay, now you should consider just becoming a student, okay, so that you get this good coaching right at your desktop, at your doorstep. Okay, we can teach you wherever you are through online learning. All right, so until next time, may the good Lord continue to bless you forever. Amen.